began with tariffs, but it is now about critical minerals. From what I'm reading here, and you can tell me what you think, it seems to me that tariffs are a secondary issue for the United States right now. That actually the flow of critical minerals, particularly the rare earths, has become the number one issue, and that the trade tariff stuff is kind of like small potatoes, so to speak. Hello and welcome to the Northern Miner Podcast. My name's Adrian Pocobelli. And what a beat we have here on the metals, minerals, and mining front. Right now, China and the United States are meeting in London. It's a 2-day meeting. They met yesterday. We got a story from CNBC. China and U.S. set to continue trade talks as Trump touts, quote, good reports, end quote, from London. This by Holly Elliott. And this is what I want to highlight here, scrolling halfway down the article. National Economic Council Director Kevin Hassett on Monday told CNBC's Squawk Box that the U.S. was seeking confirmation China would restore the flows of critical minerals. Quote, the purpose of the meeting today is to make sure that they're serious, but to literally get handshakes and get this thing behind us, end quote, Hassett said. He added that he expected it, quote, to be a short meeting with a big, strong handshake. Our expectation is that immediately after the handshake, any export controls from the U.S. will be eased and the rare earths will be released in volume, and then we can go back to negotiating smaller matters, end quote, Hassett said. In other words, then we can go back to negotiating the smaller matters called the tariffs. So quite an admission, I would argue, on the part of the administration of the cards that China holds here. Another headline, this was June 8th, so on Sunday, this is Bloomberg News, U.S. seeks deal in London on China rare earth flows, Hassett says. And as it says here, U.S. negotiators will aim to restore the flow of critical minerals when they meet with Chinese counterparts for a new round of trade negotiations Monday in London, a top economic aide to President Donald Trump said. Quote, those exports of critical minerals have been getting released at a rate that is, higher than it was, but not as high as we believe we agreed to in Geneva, end quote, Kevin Hassett, director of the National Economic Council, said Sunday during an interview on CBS News' Face the Nation with Margaret Brennan. So 2 weeks in a row now, Face the Nation with Margaret Brennan has been discussing rare earths. As it continues here, rare earth flows became a new flashpoint in the testy bilateral relations in recent weeks. Top U.S. officials, including Trade Representative Jameson Greer, accused Beijing of failing to comply with the elements of the trade agreement brokered last month in Geneva by slowing down and choking off critical minerals needed for cutting-edge electronics. Trump on Friday described talks with China as, quote, very far advanced, end quote, and said that Xi Jinping agreed to speed shipments of the critical rare earth minerals. China said on Saturday it approved some applications for rare earth exports, but didn't elaborate on the product's applications or destinations. And here's Hassett again on CBS, quote, I'm very comfortable that this deal is about to be closed. We want the rare earths, the magnets that are crucial for cell phones and everything else, to flow just as they did before the beginning of April. We don't want any technical details slowing them down, end quote. So as I was describing it last week, there was a tinge of desperation, and that tinge continues here. And to illustrate the point, look at what the U.S. is having to give back here. We have a headline from the Financial Times. Trump eyes easing U.S. chip export restrictions to secure Chinese rare earths. If you back up a bit, China basically can hold the entire world as economic hostages here with these rare earth minerals. And what's kind of fascinating about it is they can even undermine the entire world's militaries, as we're going to learn from a brand new article in the New York Times discussing samarium. They can undermine the entire, world's militaries without firing a shot. And scrolling down a bit here, the Financial Times continues, Hassett's comments were the first suggestion that Trump was willing to put export controls on the negotiating table. It would mark a significant departure from Joe Biden's administration, which introduced sweeping export controls designed to make it harder for China to obtain advanced U.S. chip technology that could help its military. Hassett did not specify which export controls would be eased, but suggested that the administration would not loosen restrictions designed to prevent U.S. chipmaker NVIDIA from selling high-end chips to groups in China. So that's where we are in terms of this whole discussion. Now, backing up to last week, let me take you through the headlines that occurred here day by day as we recount the history of articles on this issue. This is Reuters, June 3rd, via mining.com. Global alarms rise as China's critical mineral export ban takes hold. And just a couple of lines here. Alarm over China's stranglehold on critical minerals grew on Tuesday as global automakers joined their U.S. counterparts to complain that restriction by China on exports of rare earth alloys, mixtures, and magnets could cause production delays and outages without a quick solution. German automakers became the latest to warn that China's export restrictions threatened to shut down production and rattle their local economies, following a similar complaint from an Indian EV maker last week. So that was June 3rd. We also had a fascinating article in the Wall Street Journal. Automakers race to find workaround to China's stranglehold on rare earth magnets. This is by Sean McLean. And here's the subheadline, which tells you basically everything you need to know. Major manufacturers fearful they will have to shut down assembly lines and consider moving some parts of production to China. That is the Wall Street Journal. Scrolling down about halfway through the article, if automakers end up shifting some production to China, it would amount to a remarkable outcome from a trade war initiated by President Trump with the intention of bringing manufacturing back to the United States. Quote, if you want to export a magnet from China, they won't let you do that. If you can demonstrate that the magnet is in a motor in China, you can do that, end quote, said a supply chain manager at one of the car makers. And also on June 3rd, we got the New York Times. What to know about China's halt of rare earth exports. China has suspended almost all exports since April 4th of 7 kinds of rare earth metals, as well as very powerful magnets made from 3 of them. The halt has caused increasingly severe shortages that threaten to close many factories in the United States and Europe. So we're at June 10th. So you do the math, April and May, so let's call it 9 weeks. It is 9 weeks since April 4th. That is how long it takes to cause a shortage. And that was probably with some stockpiling by the companies. Now you imagine they are running on empty. And then we get your classic discussion of rare earths, where China produces 70% but processes 90%. But that oversimplifies and overgeneralizes the situation. Scrolling about halfway down the article, China's dominance is greatest for 7 rare earths that it has mostly stopped exporting since early April. Dysprosium, gadolinium, lutetium, samarium, which we have a full article on in the New York Times coming up here, scandium, terbium, and yttrium. These are mined almost exclusively in China and Myanmar and are amongst the hardest to separate chemically. For metals like dysprosium and terbium, so-called heavy rare earths that are used for heat-resistant magnets, China's refineries produce up to 99.9% of the world's supply. So other than, experiments that are being done in labs somewhere, 99.9% of the world's supply, you see the situation here. When we see China produces 60% or 70% of the world's rare earths, in fact, it processes 90%, but in crucial cases, it actually produces basically 100%. I think we can round up 99.9%. Let's just call it 100% in all practical terms. Then on June 4th, we got a headline from Reuters. China's rare earth export curbs hit the auto industry worldwide. EU Commissioner says bloc must cut dependence on China for critical minerals. BMW says supplier network affected, but plants running normally. Suppliers Association, CLEPA or CLEPA, warns of further production outages due to shortages. Ford CFO says rare earths issues will continue. And we have a quote from Sherry House, Ford's finance chief, at an investor conference on Wednesday. Quote, it just puts stress on a system that's highly organized with parts being ordered many weeks in advance. End quote. She said China's export controls add administrative layers that are sometimes smooth and sometimes not. Quote, we're managing it. It continues to be an issue and we continue to work with the issues. End quote. EU Trade Commissioner Maros Sefcovic said on Wednesday that he and his Chinese counterpart had agreed to clarify the rare earth situation as quickly as possible. Quote, we must reduce our dependencies on all countries, particularly on a number of countries like China, on which we are more than 100% dependent, end quote, said EU Commissioner for Industrial Strategy Stéphane Séjourne. Quote, the export curbs increase our will to diversify, end quote, he said as Brussels identified 13 new projects outside the bloc. Europe's Auto Supplier Association CLEPA said several production lines have shut down after running out of supplies, the latest to warn about the growing threat to manufacturing due to the controls. Of the hundreds of requests for export licenses made by auto suppliers since early April, only a quarter have been granted so far, CLEPA added, with some requests rejected on what association described as, quote, highly procedural grounds, end quote. It did not identify the companies, but warned of further outages. Scrolling down, earlier on Wednesday, Mercedes-Benz production chief Jörg Bertsen said he was talking to top suppliers about building, quote, buffers, end quote, such as stockpiles to protect against potential threats to supply. Mercedes was currently not affected by the shortage. So next, headline, Reuters via mining.com. This is June 4th. China increases scrutiny over rare earth magnets with new tracking system. China has introduced a tracking system for its rare earth magnet sector, three sources said, as its export restrictions on them begin to cut off customers around the world. The national tracking system, which went into effect last week, requires producers to submit extra information online, including trading volumes and client names, said two sources familiar with the matter and another briefed by those involved. Beijing unveiled high-level plans to establish an information tracing system for rare earth products last June, but there had been no implementation until last week, according to the source briefed on the matter. The added level of scrutiny suggests that China's export controls on rare earths and the associated magnets, where it has a near monopoly on production, could become a permanent feature for the products. I mean, what does this do to your negotiations? We're already seeing the chip export restrictions potentially, at least being discussed, of being relaxed. And we have a quote from Tim Zhang, founder of Singapore-based Edge Research, quote, our current hypothesis is that China would continue its export control mechanism on rare earths as it is an ace card for China to hold, end quote. And indeed, I mean, well put. June 5th, Reuters via mining.com. Trump set to waive requirements to boost critical minerals. President Donald Trump is set to use emergency powers and slash legal requirements, including some congressional funding approvals, relating to a law aimed at lifting U.S. production of critical minerals and weapons, according to a document seen by Reuters. Trump's action would apply to the Defense Production Act, a U.S. law that grants the president broad emergency powers to control domestic industries and resources during national security emergencies. The document is expected to be published on the Federal Register on Wednesday, the government website shows. Then we have a headline from June 6th. This is Reuters via mining.com. China issues rare earth licenses to suppliers of top 3 U.S. automakers. China has granted temporary export licenses to rare earth suppliers of the top 3 U.S. automakers, two sources familiar with the matter said, as supply chain disruptions begin to surface from Beijing's export curbs on those materials. At least some of the licenses are valid for 6 months, the two sources said, declining to be named because the information is not public. Now, what's interesting about this is the automakers are getting all of the attention here. But what about all of the other industries that rely on rare earths? I mean, China can negotiate with the administration and say, yeah, okay, we'll relax on the 3 automakers. What does that do to the rest of your, modern economy? What does that do to your robotics development? So interesting there. Another headline from June 6th, which was Friday, Trump says China's Xi agreed to let rare earth minerals flow to U.S. This is CNBC. And then on Saturday, June 7th, this is Reuters via mining.com, China says it may speed up rare earths application approvals from EU. China is willing to accelerate the examination and approval of rare earth exports to European Union firms, and will also deliver a verdict on its trade investigation of EU brandy imports by July 5th, its Commerce Ministry said on Saturday. If I had to title this podcast, it would be China's Revenge. For all of these, car tariffs, for all of these export controls, even you could argue for all of the comments that they are cheating. This really is China's revenge, isn't it? So it's going to be interesting to see how this all plays out. It continues, price commitment consultations between China and the EU on Chinese-made electric vehicles exported to the EU have also entered a final stage, but efforts from both sides are still needed, according to a statement on the Chinese Commerce Ministry's website. So this is really China's chance to renegotiate everything, isn't it? And what is the EU and the US going to do? Then we have a headline from Monday, June 9th. This is CNBC. China extends an olive branch to Western automakers over rare earth shortage. China appears to have offered US and European auto giants something of a reprieve over a rare earth shortage. China's Ministry of Commerce on Saturday said it was willing to establish a, quote, green channel, end quote, for eligible rare earth export license applications to expedite the approval process to EU firms. Stellantis said it is closely monitoring the situation and, quote, working with suppliers and institutions to ensure an efficient licensing process, end quote. The company, which owns household names including Dodge, Fiat, Chrysler, and Peugeot, said it has been able to address, quote, immediate production concerns without major interruptions. And we have a quote from Maximilian Butek, an executive director and board member of the German Chamber of Commerce in China, who said, quote, it all hit us quite by surprise that China is even willing to draw this card because this is a retaliation measurement towards the tariffs the US implemented, right? And we, as European companies, we are now in the crossfire of this trade escalation, and this is really not where we want to be, end quote. It is not enough just to announce it, but they have to show it, end quote, he added. I don't know if they have to do anything, to be super blunt about it. I don't know if they have to do anything. You know what this is to me? When you take a step back and you think about it, it's sort of like this was always an abstraction, these shortages. It was always a news article. It wasn't real life. And what we're seeing here is where theory, abstraction, ideas, words are now meeting concrete reality. And it's all becoming very real. People can now feel it. This is no longer a discussion. This is a reality. And finally, we have a quote from Jonathan O'Riordan, International Trade Director at ACEA, who told CNBC, quote, generally, global stocks of these magnets are quite low. And given that China is the bulk global supplier, it has meant that, in the absence of these export licenses, those stocks have been depleting progressively since the start of April. We're gradually coming into a very, very critical moment where those stocks are now being exhausted, and we're potentially going to see production stoppages, end quote. ACEA's warning followed a separate, ominous update from the European Association of Automotive Suppliers. Last week, the group said several auto suppliers' plants and production lines had already been shut down due to Beijing's recent export restrictions, with further outages expected as rare earth inventories deplete over the coming weeks. Japanese automaker Suzuki Motor, however, suspended production of its Swift car due to China's rare earth curbs, Reuters reported Thursday, citing two unnamed sources. Then we got this article in the New York Times, also June 9th. China's chokehold on this obscure mineral threatens the West's militaries. And this is on the homepage, by the way, of NewYorkTimes.com. China produces the entire world's supply of samarium, a rare earth metal that the United States and its allies need to rebuild inventories of fighter jets, missiles, and other hardware. So this is one of the 7 rare earths that were restricted in April. This is by Keith Bradsher at the New York Times. China's strict controls on the export of heat-resistant magnets made with rare earth minerals have exposed a major vulnerability in the U.S. military supply chain. Again, major vulnerability. Without these magnets, the United States and its allies in Europe will struggle to refill recently depleted inventories of military hardware. For more than a decade, the United States has failed to develop an alternative to China's supply of a specific kind of rare earth crucial for the manufacture of magnets for missiles, fighter jets, smart bombs, and a lot of other military gear. Rare earth minerals are a central issue in the trade talks between the United States and China, now underway in London. China produces the entire world's supply of samarium, a particularly obscure rare earth metal used almost entirely in military applications. Samarium magnets can withstand temperatures hot enough to melt lead without losing their magnetic force. They are essential for withstanding the heat of fast-moving electric motors in cramped spaces like the nose cones of missiles. On April 4th, China halted exports of 7 kinds of rare earth metals as well as magnets made from them. China's Ministry of Commerce declared that these materials had both civilian and military uses, and any further exports would be allowed only with specially issued licenses. The move, according to the ministry, would safeguard national security and fulfill international obligations such as non-proliferation, end quote. And you just wonder, you're hearing about weapons exports to Taiwan. I mean, is that also on the menu? China can just put out its laundry list of whatever it wants, it seems at this point. So it's going to be interesting. Should they get the rare earths to flow again in a meaningful way, in volume, as Kevin Hassett puts it, what will the United States have to give? And what are they willing to say publicly, and what are they giving in private is another question as well. Finally, the ministry has begun issuing some licenses for magnets that include 2 of the restricted rare earths, dysprosium and terbium, to automakers in Europe and the United States. Magnets with these 2 rare earths, which are used in brake and steering systems, can withstand the heat of a nearby gasoline engine, but cannot reliably tolerate the greater heat encountered in military applications. But there has been no sign that China has approved exports of samarium, which has few civilian applications. Now, we can't read the whole thing, although I'd like to. But I did want to scroll to the end of the article here, because it kind of says everything you need to know about why the West is in this situation. A new company, MP Materials, has acquired the Mountain Pass mine and resumed operations there in 2018. But it initially shipped ore to China for processing. The Defense Department awarded $35 million to MP in early 2022 to start production of samarium and several other rare earths that China has now restricted. MP then spent $100 million using a lot of its own money to buy the necessary equipment to process them, said James Litinsky, the company's chief executive. The Biden administration soon after awarded $351 million to Australia's Lynas Rare Earths to build a facility in Texas that would also produce samarium. Mr. Litinsky said the market for samarium was so small that it would be uneconomical to have 2 producers in the United States. So MP never installed its samarium processing equipment, which is still in storage. But Lynas never built its Texas factory, after a permit it had for rare earth mining in Malaysia that was in limbo was eventually renewed. Lynas did not respond to emails and phone calls for comment. MP is willing to install its samarium processing equipment now only if promised better financial terms by customers. Mr. Litinsky noted, quote, "We felt very burnt by the whole thing," end quote, he said. So they have the equipment for this crucial rare earth to process it, or at least begin to figure out how to process it, and it is in storage because I guess there's not enough money to go around out there to put this to work. Meanwhile, this is electric.co, the electric vehicle news site. So we heard about BYD's Seagull last week that is now going to be selling for $7,750 US in China. Then we have a follow-up headline just yesterday. BYD launches the Seal 06 EV at just $15,000 as a new price war in China erupts. And the Seal 06 EV is considered to be a competitor of Tesla's Model 3, which retails for $32,800 in China. So the car makers, getting killed on both sides here by China. So coming up this episode, we have a wonderful discussion with Mark Patterson, BC mining industry leader at PwC Canada. They just released a report, From Shock to Opportunity, A Time for Decisive Action. And Mark discusses how everything is aligning for mining to boom in BC. So fascinating discussion with Mark Patterson of PwC Canada. And coming up in this week's Spotlight, we have Jim Paterson, that is 1T, of ValOre Metals, who discusses the company's Pedra Branca project in Brazil and Hatchet Lake project in Saskatchewan. So lots to look forward to this episode. If you want to find us online, you can find us at northernminer.com. You can find us on X at Northern Miner. You can find us on Instagram at The Northern Miner, and on Facebook, LinkedIn, and YouTube, where we also host these podcasts, and wherever podcasts are available, including Spotify, SoundCloud, and Apple Podcasts. And with that, let's turn to Jim Paterson, Chairman and CEO of ValOre Metals, for this week's Spotlight. Joining us today, I'm very pleased to welcome to the Northern Miner podcast, Jim Paterson, Chairman and CEO of ValOre Metals and a principal of Discovery Group. Jim, welcome to the show.
Adrian, it's a pleasure to be here.
It's great to have you, Jim. And so you have a few things going on here. Of course, you are chairman and CEO of ValOre. There are a couple of big projects here. For those that are unfamiliar with ValOre Metals, could you tell us a little bit about the company and its background?
Sure. We are traded on the Venture Exchange, and we've been a publicly traded company. Previously, we had a different name called Kivallic Energy. So we've been on the exchange since 2009. We originally were formed as a uranium issuer, and we had a project in northern Canada, which we have subsequently sold, but we still have one uranium project and ownership in that. And then our flagship is a 51,000 hectare platinum palladium project in Brazil called Pedra Branca.
Very interesting. I mean, platinum and palladium are feeling like they're at an interesting point right now in the market. So would you call that then your flagship project? How do you see it?
Well, it's good that we can kind of walk into it and explain it. The palladium platinum project is absolutely our flagship, and we have 100% interest in that. It's a large land package. We've actually drilled off an inferred resource of a little over 2 million ounces north of a gram near surface mineralization. But then we also have ownership. ValOre, the company, has a 51% ownership in a privately held company in Canada called HUC. And that company, HUC, has 97,000 hectares just east of the Athabasca Basin in Saskatchewan. So we get the exposure to uranium through our ownership in this privately held company. And it's our intention to spin that out into a public company.
So Pedra Branca, that's in Brazil. How far along have you come in the project so far? Are you drilling it out? Is it just started? Where are you in the project?
We're in an inferred resource. So firstly, where it is, it's in Ceará state, which is in northeastern Brazil. It's about a 4-hour drive in from the coast and a big city called Fortaleza. And we base our operations in a little town called Capitão Mor. There's a little less than 1,000 people there. And we've had the project since 2019. And when we picked it up, there was a historical resource there. And we did a 43-101 on that. There were a little over 1 million ounces. And then there were about 30,000 meters that had been previously drilled by previous groups. We've drilled over 20,000 meters. And then we've employed a lot of trado or auger drilling because most of the mineralization that we found at this property is very near surface. So it's a very effective technique of identifying and assaying mineralization right near surface. We've done lots of trenching and rock and soil samples. So we've done a lot of work, but to answer your question, it's at the inferred resource stage, a little over 2.2 million ounces, and we're currently working on the metallurgy and trying to put together a flow sheet based on metallurgical recovery processes.
Okay, excellent. And in a sense, like, how excited are you about what you're finding? Like, do you have an idea of what you think you might have?
Well, the thing that's tempered us is that the prices of platinum and palladium and the platinum side of things had been stagnant for several years since we acquired it, and palladium has kind of lost about 70% of its value since 2019. So that was tempering a lot of our unbridled enthusiasm, let's call it. But as far as the project goes, we're super excited. We're an exploration group. You mentioned that we're part of Discovery Group. ValOre is part of Discovery Group. Our reputation as a group is that we're explorationists. We make discoveries, and then we know how to push along that project to inevitably get an exit out of it. So we know what we're doing from an exploration perspective, and this project has tons of exploration upside, over 80 kilometers in terms of a big trend. The mineralization is right near surface. We don't doubt that we can find a lot more, but what we were kind of working on is figuring out how we can make this economic. So we're working through the metallurgy to enable us to put together a PEA. And then hopefully in a better pricing environment for palladium and platinum, we can deliver a robust PEA to the marketplace and then take it on from there. But excitement on the exploration. And recently, as you mentioned, more platinum than palladium has really been catching a bid. So we're quite excited about that. That's bringing in a lot of new investors. And there's quite a bit of excitement around the story now.
Interesting. And just on Brazil briefly, how are you finding the permitting environment? Like, is there encouragement? In a sense, do you get the sense that the local governments want this to succeed and to go forward? How is that side of things?
I absolutely love Brazil, and I will shout from the rooftops about mining in Brazil right now. In fact, the Brazilian contingent came to PDAC, which is the largest mining and investment conference in the world that happens in Toronto every March. And the Brazilians just came to play. They were awesome. They have some of the best people in the world right now in the mining sector, and they're really coming into their own. From a permitting perspective, it's super important because the people that are in the regulator position are super experienced as well as being competent. And so if you're experienced and competent, you will be confident in your decisions. You will not hem and haw and delay projects unnecessarily. So you've got just amazing geologists and engineers and regulators. What's also really cool about Brazil right now is that you've actually got a homegrown investment community that's popping up with funds in Rio and Sao Paulo. And so instead of a Canadian company going to Brazil, having all Canadian directors, maybe having one token director, needing to bring in, like, import all of the exploration team in Brazil now, it's the opposite. You've got fully functioning exploration teams that are sort of world class. You've got directors that know what they're doing, and you've got investors that are not only investing in Brazilian projects, but I know guys that are bankers from Canada that when as an example, uranium company that has a project in Canada wants to raise money, they will fly to Brazil and pitch the deal to Brazilian investors, and they are writing big tickets. So you got this amazing thing happening in Brazil right now. So we're quite excited, and we think ValOre is a great vehicle to participate in that sea change.
Very interesting. And as far as the team, speaking of people, who do you have lined up, in a sense, to push these projects forward?
Well, ValOre is a proud member of the Seriously and Serially Successful Discovery Group. So you can look us up at discoverygroup.ca. So ValOre is a member of that alliance of public companies. And then individual members of ValOre's board and management team have had great success all over the world: gold, metallurgical coal, uranium, base metals, critical minerals. So when I say success, I mean making acquisitions, making discoveries, and then leading those companies to exits. With respect to the team on the ground in Brazil, Tiago Dinez is the VP exploration. And I met Tiago after he'd come up to Canada to get his master's in economic geology. He worked for a Canadian Explorco that was operating in Quebec. And he leads a team now of fully functioning and very, very proficient Brazilian exploration team on the ground. Several of them live in Belo Horizonte, but the majority of the people that work for us actually live in Capitão Mor. So we've got a great team supported by strong capital markets presence in Canada.
Okay, excellent. And what's the roadmap here? How do you see things playing out in, say, the next 6 months to 2 years?
With respect to the roadmap for the next 6 months to 2 years, the next 6 months will be focused fully on metallurgy and really cost-effective near-surface exploration at site using auger drilling. So we're going to continue to add growth. At the same time, we're really focused on developing a flow sheet based upon metallurgical work, and it's coming together pretty well. We're working with some of the best metallurgical practitioners in the world in South Africa right now. And once they give us the optimal flow sheet, we'll be working very quickly to move it towards PEA, and from PEA as fast as possible through the permitting process to take it towards production if it's commercially viable based on those numbers.
And so what do you want investors to know about ValOre Metals? What would you like them to take away from this conversation?
I think in terms of what we want investors to know about ValOre right now is that we've made significant investment over the last 5 years in a project that is very high quality. And the underlying commodities for which we're working in exploration programs on are starting to turn. The excitement's coming back. So we see huge upside right now in things that are external to us, which is the price of platinum, the price of uranium, and all that work and all that investment is going to come to fruition right now as those prices rise. So it is an exciting time and things are starting to bubble up. And we hope people stay in touch and keep up to date with what we're up to.
So if people want to learn more, what should they do?
They should immediately type in valoremetals.com. There are a number of news releases, there are PowerPoints, and also we have a recently updated media section. There's lots of information on the Pedra Branca project. There's information on Brazil. There's information on a transaction that we're looking at doing as well. And then finally, there's a lot more color on our ownership in HUC, which is our uranium project in Canada.
Jim Paterson, Chairman and CEO of ValOre Metals and a principal of Discovery Group, thank you for joining us and sharing all that you're working on at the company.
Thank you, Adrian. Have a wonderful day.
And thank you once again to ValOre Metals for sponsoring this week's episode of the Northern Miner Podcast. If you want to learn more, visit valoremetals.com. Turning to the website, Rio Tinto in bailout talks for Australian aluminum smelter, AFR reports. This is Reuters via mining.com. As we see in the rare earths example, metals processing a crucial but underappreciated aspect of this entire discussion. Global miner Rio Tinto is in talks with Australian federal and state governments about a multi-billion-dollar bailout for its struggling Tomago aluminum smelter in New South Wales state, the Australian Financial Review reported. The newspaper, citing sources it did not name, reported late on Friday that talks centered on the smelter's electricity contract for 2026 to 2029 and federal production tax credits. Rio and the offices of New South Wales Premier Chris Minns and Prime Minister Anthony Albanese did not immediately respond to Reuters' request for comment on the report. The future of the facility, majority owned by Rio, has been uncertain for months, due in part to spiraling energy costs, according to the report. In February, Rio, the world's largest iron ore producer, said it would decide the smelter's future by mid-year. Australia's centre-left government in January pledged $2 billion Australian in production credits to help support the country's 4 aluminum smelters, including the Tomago facility, switch to renewable power before 2036. Very interesting. Continuing with Rio Tinto, Stousholm dismisses rift rumors as Rio opens $2 billion mine. This is Cecilia Jamasmy at mining.com. Rio Tinto's departing chief executive, Jacob Stousholm, insists there is no rift between him and chairman Dominic Barton, despite reports that have fueled speculation about tensions within the board over strategic direction. Speaking publicly for the first time since the announcement of his departure 2 weeks ago, Stousholm addressed the rumors at the official opening of Rio's $2 billion Western Range iron ore joint venture with China's Baowu in Western Australia's Pilbara region. The executive said the management team and board remained, quote, absolutely aligned, end quote, on the company's values, strategy, and performance assessment, downplaying any suggestion of internal division. He also said his successor could, quote, very well be, end quote, an internal candidate. So Stousholm making an appearance. Another Rio Tinto story, Serbian farmers vow to oppose Rio Tinto lithium project even after EU labels it strategic. This is Reuters via mining.com. So Rio Tinto's controversial Jadar lithium project back in the headlines. Zlatko Kokanovic, a farmer from Serbia's Jadar region, is determined to stop development of a Rio Tinto lithium project, identified this week as strategic by the European Commission, as it aims to cut dependency on China for mineral resources. The mine in Jadar Valley would eventually meet 90% of Europe's lithium needs should it go ahead. But like thousands of protesters, including many other farmers who have sought to block development of the project in recent years, Kokanovic is worried about pollution of farmland in a region where a majority of people live off agriculture. Quote, there are some things the money cannot buy, end quote. Kokanovic, a father of 5 children who is one of the region's largest milk producers and a leading activist, told Reuters. Quote, I want to tell them, Rio Tinto, not to try to develop the mine or there will be unrest, end quote, he added. Rio Tinto's managing director for the Jadar project, Chad Blewett, said, quote, the project will be delivered to the highest levels of transparency, to the highest levels of environmental protection and human rights standards. The European Union and European Commission never substitute, they never sacrifice those high standards, end quote. Continuing on, Defence Metals eyes $250 million loan for BC rare earths. This by Frederick Tomesco at the Northern Miner. Defence Metals said Export Development Canada could lend up to $250 million US to help the company develop and build its main Wichita rare earth project in British Columbia. The stock jumped. Canada's Export Credit Agency expressed its interest in participating as a mandated lead arranger for the debt refinancing package, Vancouver-based Defence Metals said Wednesday in a statement. EDC issued a letter of interest in response to a company request for potential financing support. Defense Metals said. And we have a quote from Guy Decelliers, Defense Metals executive chairman, who said in a statement, quote, "This is a strong endorsement of the strategic importance of the Wichita rare earth project and shows the key role that EDC might consider playing in its financing." End quote. Wichita could, quote, "contribute to a number of Canadian priorities, including the clean energy transition and the security of supply of critical minerals." End quote. Continuing on, Graphite One surges on Fast 41 for Alaska project. It's by a staff writer at northernminer.com. Shares in Graphite One gained after the company said the U.S. government put its billion-dollar Alaskan project in a fast-track approval process. Graphite One is advancing its Graphite Creek project, deemed America's largest reserve of the battery metal, in the Kigluake Mountains of Seward Peninsula, 60 kilometers north of Nome. And we have a quote from CEO Anthony Houston, who said in a statement on Tuesday, quote, "With President Trump's critical mineral and Alaska executive orders, Graphite One is positioned at the leading edge of the domestic critical mineral renaissance." End quote. The approval is a major step for, quote, "our complete U.S.-based supply chain strategy." End quote. Continuing on, another headline, Northern Dynasty CEO sees Trump as pro-Pebble. This is by Frederick Tomesco at northernminer.com. Could this be the year that Northern Dynasty Minerals' controversial Pebble polymetallic project in southwest Alaska finally makes strides? Northern Dynasty, together with the state of Alaska and 6 native villages, is awaiting news on its legal bid to overturn a 2023 U.S. Environmental Protection Agency veto against Pebble. A decision in the matter is expected in 2025, and CEO Ron Thiessen is optimistic that the mine could open by the end of 2032 if the courts rule favorably. Quote, "There's a good chance that the veto can get removed in the near term, maybe sometime this summer," end quote, Thiessen told the Northern Miner in an interview in May. Quote, "Thankfully, we have an administration that doesn't really like vetoes and wants to see resource development." End quote. So the saga continues at Northern Dynasty. Continuing on, Quebec's Dumont nickel project on new EU lists. This is by a staff writer at the Northern Miner. The Dumont project in Quebec, one of the world's largest undeveloped nickel-cobalt deposits, is among global critical mineral developments the European Union wants to invest in as China limits exports. The bloc has earmarked $8.6 billion Canadian for 10 battery metals projects, including lithium, cobalt, manganese, and graphite, while 2 other targets rare earth element production. All of them are outside the EU. So that is quite something. The EU, so these cutoff of rare earth exports are definitely sharpening the minds of policymakers in the West. Another headline, London Metal Exchange acts to shield aluminum market from huge Mercuria bet. This is Bloomberg News via mining.com. The London Metal Exchange has compelled Mercuria Energy Group to lend out its huge position in aluminum to other traders to reduce risk to the market, according to people familiar with the matter. The LME took action after Mercuria's position in the June contract was consistently far bigger than the aluminum inventories in the exchange's warehouse system, most of which are already owned by Mercuria, the people said. That means if Mercuria were to hold the position to expiry, those on the other side of the market might struggle to find sufficient aluminum to deliver against their short positions. So interesting story there. Another headline, Zambia seeks car makers to make EV components near copper mines. This is Bloomberg News via mining.com. A trend we've seen in the last 3 years are these commodity producers want to move up the supply chain to produce actual products rather than just sending out the metal out of the country. Zambia has held talks with car makers to entice suppliers to build electric vehicle component plants near its copper mines. Quote, "We have been talking even last week when I was in Germany, telling these companies to please consider the manufacture of some of your electric vehicle components in Zambia," end quote, Finance Minister Situmbeko Musokotwane said in Livingstone on Monday. Quote, "Those components can then be shipped to your factories in South Africa, which now exports to the rest of the world. That is a powerful way of value addition," end quote. So Zambia wanting to capitalize on its massive copper deposits. Another headline, platinum price surges to highest in 4 years as market tightens, and we've been seeing big moves in platinum. And this is by a staff writer at mining.com. The platinum price extended its rally for a 6th straight session on Monday, climbing to its highest level in over 4 years amid signs of growing market tightness. And we have a quote from Alexander Zumpf, a trader at Heraeus Metals, Germany, who told Reuters, quote, "It's supported by a combination of tight supply expectations, improving industrial sentiment, and technical follow-through from the broader precious metals rally, end quote. And we're going to see more of that in metals prices. Another headline, silver price rallies another 2%, mirroring gold's year-to-date gains. This is also by a staff writer at mining.com. Silver extended its hot run on Monday, gaining another 2% to approach the $37 an ounce level as it continues to benefit from a weakening dollar and other market tailwinds. So big move in silver. And finally, we have a headline from Reuters via mining.com. Nickel oversupply to persist on expansion, slower demand growth, industry experts say. Oversupply in the global nickel market is expected to persist over the next few years given production capacity expansion and slower growth in demand for the metal used in batteries and stainless steel, speakers at an industry event said this week. A surge in new nickel supply in Indonesia, the world's biggest producer with a market share of about 63%, has led to benchmark prices halving over the past 3 years. Quote, the market is in oversupply, and in Indonesia, several projects in the pipeline will be completed soon, increasing production capacity. End quote, Macquarie analyst Jim Lennon told an industry conference organized by Shanghai Metals Markets in Jakarta. Lennon expects his surplus to continue until 2027 to 2028. So those are your news stories. Now, let's take a look at metal prices. And turning to metal prices, let's take a quick look at the bond market for context. The U.S. 10-year bond is yielding 4.46%. That is 0.05% higher than last week, to almost at 4.5% again, but without all of the discussion around it that we were seeing in the last 6 weeks or so. The UK 10-year gilt is yielding 4.62%. That is down 0.01%. From last week. The Italy 10-year bond is yielding 3.47%. That is down 0.03% on the week. And the German 10-year Bund is yielding 2.55%. That is up 0.05% on the week. And the Japanese 10-year bond is yielding 1.48%. That is down 0.02% on the week. When we look at the bond market, it seems to be a consolidation that is happening here at higher yields. And dare I say it, a kind of normalization at these higher levels. We're not hearing the same concerning headlines that we were hearing, again, in the last few weeks. Turning to precious metals, gold is trading at $3,349.30 per ounce. That is down $6 on the week. Silver is trading at $36.67 per ounce. That is $2.25 higher than last week, so big move in silver. Platinum is trading at $1,214.60 per ounce. That is $157 higher on the week, so up almost 15%. Amazingly. Palladium is trading at $1,084 even, and that is $99 higher than last week, so up almost 10% on the week. Turning to industrial metals, copper is trading at $4.89 per pound. That is 6 cents higher than last week and starting to threaten $5 again. Iron ore is trading at $96.18 per metric ton. That is down $3 on the week. Aluminum is slightly higher at $1.13 per pound. That is a penny higher on the week. Lead is unchanged at 90 cents per pound. Nickel is back below $7 at $6.98 per pound. That is 5 cents lower than last week. Tin is trading at $14.67 per pound. That is 88 cents higher than last week. Cobalt is unchanged at $15.29 per pound. Lithium continues to fall at $8.39 per kilogram. That is 4 cents lower than last week. The decline is starting to slow down, though. Uranium is trading at $70.50 per pound. That is $1.35 lower than last week. And zinc is also lower at $1.20 per pound. That is 2 cents lower on the week. Zooming out, silver, platinum, and palladium break out, while copper continues to edge higher and the rest of the industrial metals edge sideways. And those are your metal prices. Coming up, I'm very pleased to welcome Mark Patterson for the first time to the Northern Miner podcast. He is BC mining industry leader at PwC Canada, and they have just released a report called From Shock to Opportunity, A Time for Decisive Action, and that is on PwC's website. So Mark describes a kind of aligning of interests here in this discussion on the development of the mining industry in British Columbia, as well as where things stand in terms of the metals that it's selling and employment and more. I hope you enjoy the conversation, and I will see you on the other side. Join us today. I'm very pleased to welcome to the Northern Miner podcast for the very first time, Mark Patterson, BC mining industry leader at PwC Canada. Mark, welcome to the show.
Adrian, thanks so much for having me.
Well, it's a delight to have you, Mark. Mining in Canada has been an issue, a topic that is coming to the fore with the recent election. And of course, there were the tariffs that were imposed in the United States. I guess big picture here, how are things going in, British Columbia mining? And let's just start there.
Sure, thanks. You know what? I think actually we're in pretty good shape in British Columbia from a mining industry perspective, which is actually exciting. We've seen from a overall perspective, revenues from the industry remain relatively flat last year relative to the year before. But I think we've seen continued investment in capital expenditure. And as we move into 2025 and the topic at hand with the tariffs, I think in a lot of ways, British Columbia is uniquely positioned with respect to our trade exposure to the U.S. from a mining industry perspective. Mining, obviously, international business, but we really see that a lot of the product produced at mines in British Columbia is shipped out of the province to Asia. So rather than going south of the border, as you might initially think, a lot of the product is shipped internationally.
That is quite fascinating, actually. And is the idea that it is being shipped to, say, let's say China to get processed? Is that the general situation?
Yeah, I mean, a lot of it travels primarily Asia, as I said. So China, Japan, Korea, and other places in Southeast Asia for processing. We produce, obviously, a lot of primary products in British Columbia, metallurgical coal, copper concentrates for ultimate refining into refined copper. And we also produce a lot of gold, which doesn't necessarily need to travel as far. A lot of that's actually stays within Canada and sold to various financial institutions who want to hold that metal more as a store of value.
And in terms of the tariffs, I mean, have you started to see any impact at all on this, or is it too early?
I think it's really too early to understand, what the full impact is going to be. And of course, the situation itself is very variable, changing almost day by day here. But I think as we look at how it's going to affect the industry in British Columbia, it's less so, as I said, on the sales and marketing side with the products being shipped overseas, more likely to have some impact on supply chains and cost of production, as a number of products are going to be sourced from various places south of the border. But I do think as we look at operators in the province, they are obviously starting to think about how they can source inputs to their processes from different locations. And I should say, just, on the sales side of things, we do have a number of metals mines in the province, which are, as I said, largely shipping their product elsewhere rather than the US, but we do have a couple of smelters, so refined finished metal producers, and those are more exposed to the US market. Typically, production from those facilities does largely go to the US, so we know that they are looking for alternative outlets for their production.
And in terms of the metals, I mean, you mentioned gold, you mentioned metallurgical coal. I was pretty surprised to see in the report that metallurgical coal took up something like 52% of the exported metals out of British Columbia. I was quite surprised to see that, but that was actually down from previous years. Is this a good news story or is this a bad news story? I mean, not everybody loves coal.
As you highlighted from our report, we've noted metallurgical coal is a really key part of mining in the province of BC, and we have a number of significant metallurgical coal mines located in the southeast and the northeast part of the province. British Columbia historically and continues to be one of the largest producers of metallurgical coal that goes into the seaborne metallurgical coal market. Metallurgical coal, of course, being for steel making rather than thermal coal that we think of for energy generation. What we've really seen this year is the price of that commodity come down somewhat, so reflecting a reduced proportion of the total value of production generated in British Columbia. I mean, it's still a very important part of the industry. And of course, steel, as we've seen in recent days with the tariffs on that product specifically coming out of the US, still an important input to a lot of industrial production. And of course, in a lot of ways to the green transition as well as we think about building large facilities. So still an important commodity for British Columbia and still an important driver of value to the mining sector here in BC.
Okay, so in a sense, if I understand you correctly, this is more of a function of price, the declining revenue, than, say, of volume.
That's largely it. Yeah, that's correct.
Okay, excellent. So just in terms of other metals, I mean, we hear a lot of discussion about critical minerals. It's kind of a bit of a slippery term because almost all metals are starting to sound critical. What role are, say, critical minerals playing in BC mining? What are the important metals here? You mentioned, again, metallurgical coal. You mentioned gold. I imagine copper. How do you see the critical minerals side of things?
I think as we've seen, thinking about green energy transition, probably the most important of the commodities from a production perspective is copper, which is from a value generation perspective, the second largest metal that we produce here in British Columbia. We are obviously the largest producer in Canada of copper, and we have some very large facilities here in the province. And then we have also got zinc, we have a large zinc facility here in British Columbia as well. And so those are all inputs to obviously electrification, steel making, and other important elements of the energy transition. As I mentioned before, gold, obviously very different, not viewed as a critical mineral, but clearly in uncertain times, an important store of value. So that's why we've seen gold prices really on a significant run here in the last little while, given all the geopolitical uncertainty, not just with the United States, but globally.
Okay, very interesting. And we just had an election in Canada. As we're seeing globally, and especially, say, with the United States, I mean, mining and mineral exploration and just critical minerals in general have become a major, top of mind issue for policymakers really around the world. I mean, we see it in Australia, we've seen it in Canada, and we've seen it in the United States, all over the place. So have you seen any changes yet in Canada? It's probably too early. And if not, I mean, what kinds of things could, the new Canadian government here or just government in general, whether it's provincial or federal, what kinds of things could they do, say, to improve the lot of, say, mining companies in British Columbia?
Yeah, I think on the Canadian federal government side, it's probably a little bit early days, but all indications from a mining industry perspective are positive. I think there's a lot of dialogue, as you mentioned, around the desire of the federal government to action on the opportunity that exists within the mining space and help make mines come to reality. And an important element of those, of course, as well is infrastructure assets to get those products produced at the mines to market. So rail, port facilities, and all of those large projects seem to be on the federal government agenda. Not that long ago, we had a provincial election here in British Columbia. I think we've seen the provincial government also have renewed focus, and they've had a bit more time now to start to get themselves organized. So we now in British Columbia have a dedicated ministry for mining and critical minerals with a mandate that is specific to making this sector successful and obviously advancing some of the projects that are here in British Columbia. I think, in a lot of respects that the time is right for the sector. As we talked about it a couple of minutes ago, mining in BC in particular is perhaps less trade exposed to the US than some of our other industries in the province, like, forestry, where things are primarily shipped across the border to the US. And so there's really an economic imperative for governments to act. And what does that look like? A number of things. I think the key one, obviously, is around the timelines from a permitting perspective and the scope and any degree of overlap in the permitting process. So making sure that if a company is operating within the framework of a particular jurisdiction, be it British Columbia, they can operate through that jurisdiction's permitting process and have clarity that if approved, the project will go forward. I think it's important we talked a little bit in the public discourse has been this idea of fast tracking. And I think there's some hesitation on the part of companies to really use that sort of terminology because while speed, I think, is important, it's challenging from the perspective of trying to get to the right answer. And by that, I mean, obviously want the process around any permitting activities to be comprehensive, to involve all of the relevant stakeholder groups, be it local communities, First Nations, consider environmental impacts. So I think the right path forward is obviously to move with speed and to move with clarity, but also to continue to act responsibly as the industry is well known for here in BC.
It does seem to be quite a challenge. I mean, when you look at, the stakeholders, so to speak, of who you have to get on board to advance a mining project, in a sense, it goes beyond permitting, right? I mean, you have First Nations groups, you have government, and you have the mining company. And so how big of a challenge is this? It's hard enough to get two parties aligned. How big of a challenge is this to get, say, three parties aligned or even more?
It's a huge investment of time and effort, to actually make one of these projects a reality. The actual identification of the mineral or, the deposit that you want to mine is in some respects just one small element of what you need to make these projects happen. And the engagement with all the various groups that you referenced, be it local communities, provincial government, federal government to the extent relevant, First Nations groups, has to start really at a very early stage of the project. And it takes a lot of time because you want to be able to build relationships. You want people to understand the benefits. And obviously, as the proponent, an organization needs to reflect on how to actually execute on a project in a responsible way. So these are many, many year processes in the making to get to the answers of ultimately getting permitted and building the project. And we've seen one of the new mines here in British Columbia come online and have their official ribbon cutting ceremony here in the last couple of weeks. That's the Blackwater gold mine in central British Columbia. That project's been under construction for several years and in permitting for several years prior to that. So these are significant exercises in terms of the time and investment of funds.
I mean, it's interesting, isn't it? I think of the BC provincial government after the tariffs came in, when there was the most intensity and shock, you might say, in the whole discussion. I believe the Premier put out a list of something like, I want to say like 20 projects that the province wanted to fast track. But as you're discussing here, like you mentioned how the provincial government had been in power for longer than, say, the federal government. I mean, is there anything they can really do to push things forward when we talk about all these different stakeholders? Is there a way to fast track this, or is it simply an intention and they'll do what they can on their side, say of the provincial government, maybe with permitting, but that there are still going to be hurdles here?
Yeah, I mean, I think it would be silly to suggest there won't be hurdles. I think, as you referenced, the BC provincial government put out a list of projects, including some mine projects and expansions and other infrastructure that is on their priority list in terms of moving some of those projects forward. I think, as I mentioned, all of these things take a significant amount of time to come to fruition. And, the mining projects that are on that list include several expansion projects of existing mines and a couple of other projects where they're brownfield, so there were mines there before, and this would be a redevelopment into, I'll say a new mine, but on a site that has been previously mined. So I do think that as they thought about that list, they were trying to think about things that likely would be able to move through the process a little bit faster versus, say, an entirely greenfields mine operation. But in each case, I think it's all about trying to align all of the stakeholders, government, communities, and First Nations. And I think if you've got all the parties on the same page and the proponent of the project has really been able to articulate its value in terms of the economic benefit, the jobs, those sort of things, it's obviously easier to make these things come together.
Very interesting. And it does bring up the environment. I mean, ESG became an obsession, one could argue, for the mining industry, let's call it from 2016 to maybe 2023. And it's still there, but it's not quite top of mind as the conversation has shifted to the importance of the supply chain. And there is a sense, especially when you look at the United States, that environmental concerns are, you might say, taking second place to getting these critical minerals. And so do you think that's an accurate read on the situation? Say, I mean, you're talking about British Columbia. I mean, I'm sure you sense that shift as well, but do you think the environment is ultimately getting left behind a bit, or are you, feeling pretty good about the way people are approaching it?
I feel pretty good about the way people are approaching it. What we've really seen in the last little while is a little bit of a shift on the communication side. I think when we just maybe to take a step back, I think long before the ESG discourse in the last year or two, mining companies in British Columbia and Canada have been very focused on environmental management, environmental compliance, and community and social imperatives. And I think, that's part of their DNA and part of what makes Canadian mining companies successful when they go to other parts of the world is they bring that Canadian perspective with them to their projects in other places. So I think what we saw was an incredible focus on these topics from the outside looking in and a desire to have greater regulation of how actions were being communicated. And we saw obviously the SEC put out literature for public companies that would require them to report on various ESG metrics, Canadian regulators going in a similar direction. And certainly, I think there are elements of that that are very healthy to bring focus to that topic from an investor perspective. But I think when we step back and look at what companies are doing on the ground, I'm not sure that they were being swayed by what they had to report publicly or might have had to report publicly. It's certainly in British Columbia, I think they're just continuing to do what they do and have done well for a number of years in terms of being focused on the environment and safely operating here in BC.
Okay, excellent. And another thing that your report mentioned was technology, which is quite interesting. Of course, AI, you could argue, is one of the main, news themes of the last couple of years. What are you seeing in terms of new technologies changing the mining industry? I think of AI, but I mean, there's all sorts of startups I'm starting to see to try and figure out what's underneath the ground with new technologies. How are you seeing technology change the mining industry?
In our report, we highlighted a couple of local BC success stories, I would say, on the technology front, which are pretty exciting in terms of the work that they're doing, the technologies they are developing that are specific to the mining industry. One focused on subsurface mapping and another that is able to use sensors to better identify what's being mined really at the face of the operation. I think as we look at the opportunity in technology, historically, probably the mining industry, for reasons that often have to do with, safety, are sometimes have been viewed to be slower to adopt new technologies. But I think the opportunity is tremendous when we look at just the two that we highlighted in our report and others to accelerate the identification of new deposits. Really, from a people and a health and safety perspective, I think great opportunities to use technology, sensors, and other methods of analysis so that the technology is in a slightly less safe situation than the human. And of course, I think in terms of optimizing production and processing facilities, I think there's opportunities and work going on there to be able to use technology and AI to optimize how the products are being processed. I mean, when you think about mines in British Columbia, typically large scale copper mines, for example, very low grade of copper in the ground, and you're really trying to process it in the optimal way to extract as much of that small amount of metal that's being mined as possible. So I think some tremendous opportunities there to improve the economic output, improve obviously safety and operating conditions. And I think from an environmental perspective, hopefully reduce the environmental footprint or certainly enhance our ability to monitor what's happening.
Yeah, it's very interesting. I mean, your report also mentions employment, and it looks like employment is going up in the sense that there are more people working in the mining industry in BC. But do you expect that to continue, say, with AI, especially with the huge, leaps it's making even in the last, 2 months? I mean, do you expect that trend to continue with more employment? Do you expect it to plateau?
The speed of technology is amazing. I think obviously we've seen a nice trend, as we highlighted in our report around employment, more than 14,000 direct employees of the metal mines and producers in the province, which is a significant number when you think about the indirect economic impact of those jobs on communities across the province. But I think as we've got, as I mentioned, a couple of other projects that are they're going to start moving forward here in terms of operations. So I think in the short term, I'm optimistic that we'll see more employment. We'll see hopefully a couple of other larger projects that move into construction. And of course, there's always a big bump in the employment numbers around some of these large capital projects as they really ramp up. I'm optimistic in the near term. In the longer term, only time is going to tell on how the technologies that we've talked about that are pretty exciting are really going to impact the industry.
It's like I'll be interviewing a robot, but then I thought, well, maybe I'll be replaced too, Mark. So, okay, just as we finish up here, I want to talk a little bit just on, say, financing for exploration companies. It seems like it's still, slow is the sense I get. I just had Stephen Stewart on last week of the OR Group, and it still seems like it's a slow go. It's, loosening up a little bit, the purse strings, but it's still a slow go. What do you see?
I think you're right, exactly, that surprisingly, we've seen this acceleration of prices, particularly gold. We've seen healthy prices for other commodities. We've seen the mid-tier and the larger scale operators generally doing well or certainly generating cash flow. And it's really not translating down to the exploration companies. And if you have money, you can have more. If you don't have money, it's hard to get. And I think in the exploration space, obviously, that's absolutely critical because they don't have the ongoing source of operating cash flow. So we've seen a lot of exploration companies not go bankrupt. They don't tend to disappear from a mining perspective, but they kind of go quiet and dormant and their activities reduce. And I think that's not a situation that can be sustained for the longer term as we think about the importance of additional discoveries and future mines, whether they be in British Columbia or other parts of Canada. We need those exploration dollars to be spent to have new discoveries. And so I think hopefully in the next year, we will start to see that as we've seen, sustained higher prices, obviously some excitement around gold. We'll see the companies at the junior end of the spectrum being able to finance and put some money in the ground. Eventually, I'll say the dam has to burst because the large companies really need to be able to identify new projects to replace their reserves, expand their portfolios. And if no one's been doing any of that work in the exploration space, they're going to be really challenged to do that. And therefore, they at least are going to have to start investing more dollars into the ground.
Yeah, I found that very interesting. What I was reading in the report was this notion that it seems to be the senior miners should be the ones that are helping finance these companies. In a sense, do you think the government could help out in terms of maybe tax breaks for exploration? Or do you have any thoughts on how to address this from a policy point of view?
Absolutely. We've seen a lot of success with the mineral exploration tax credit, for example, that's been around for a while, almost getting renewed on an annual basis rather than made permanent. So I think, creating the opportunities for people to have a tax advantage for spending dollars in the ground in British Columbia would be an ideal thing. And so that's one example. Obviously, the entirety of the flow through tax regime is another where we really created the opportunity to incentivize investors to want to expend their investment dollars into the junior exploration space. And then I think the other piece of it, as we talked about before, and with the challenges and the scale of consultation requirements, is to really think about, is the government doing what it can to make the opportunities to access exploration and the process of consultation that's necessary, be it with local communities or First Nations groups, as straightforward as possible so that those dollars can be spent and focused on the actual exploration activity rather than, the process around doing that work.
Okay, excellent. And just a couple more questions here. The cost inflation for miners, say, since, COVID 2020, do you feel like those are under control? We see general inflation seems to have, relaxed somewhat, or do you get the sense that it's still rising?
I think I would have said, 6 months ago that it was becoming under control. I think the unknown that we have at the moment is, really where we started this conversation around the tariffs and the impact that that's going to have on miners' supply chains. To the extent that they can manage those supply chains within Canada or from other places where they can have certainty around the pricing regime, I think their costs are, much more under control and not rising like they were immediately post-COVID. The wild card, of course, is the tariff regime, as we talked about at the beginning.
Indeed. And so final thoughts here, Mark. It's an interesting report. It's nice to see things from the provincial perspective. Do you have any final thoughts on, what readers should take away from the report?
I think it's just a really exciting time for mining in general and for mining in the province of British Columbia. And I think the conditions are really lined up for success. I think, as we talked about, we have governments at both levels that have mandates and certainly at least are saying they have a strong desire to make new projects happen. I think we have, the right economic imperative, if you will, with conditions south of the border where we need to focus on industries that are going to give us greater exposure to other trade markets other than the US, and mining in British Columbia fits that bill. And finally, I think we have a level of public awareness, public engagement in the discussion around mining that we probably have certainly not seen in the recent past. And I think in a very positive light in terms of the opportunities, the economic opportunities, the jobs, the prosperity that mining can bring. So I think, we have tremendous conditions for success here in British Columbia. We really just need to capitalize on all of those things to do the best that we can with the conditions we've been presented with.
Mark Patterson, BC mining industry leader at PwC Canada, thank you for sharing your thoughts here on this week's Northern Miner podcast.
Thanks so much.
Thank you once again to ValOre Metals for sponsoring this week's episode of the Northern Miner podcast. And thank you once again to Mark Patterson for appearing on the show. And thank you, dear listener, for continuing to support this program. If you want to help out the podcast, please leave us a review in the Apple Podcast directory, share it with your friends, and until next week, take care.